Good morning, everyone, and thank you very much for joining. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. Today is Friday and it's the 18th of August. Just want to bring your attention to my email address, rshaw@fxcm.com. And if you would like to correspond, don't hesitate. That's the email address to use. I'll reply as soon as I can. And I'm going to go ahead and bring up the disclaimers. We'll start off with our high risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Thank you very much for signing in. It's a pleasure as always. Mia and Raj, pleasure to have you on the webinars. Thank you very much for joining. Just keeping this high risk investment warning on for another 5 seconds. All right, let's just bring up the market commentaries disclaimer. And our references, MarketScope 2.0 and TradingView. All right, let's just start off with MarketScope. The very last question that came through yesterday was from Kim, and he said, what about the resistance on the US dollar? And I thought, that was a really good question. Of course, I don't know if the resistance is going to be a key reaction level or not, but the fact of the matter is we are right at resistance right now, and this is a level that the market has paid attention to previously, and you can see it's hit it once, then it reacted down, twice reacted down, 3 times reacted down. This is the 4th time that we're hitting the resistance level. There is some sell pressure that has started to manifest. If you take a look, there is a slight selling tail there. I thought that was quite interesting just at the resistance area. One would think if there is going to be a reaction, well, the logical place would be at a resistance or a support level, right? What we want to do is we want to just keep an eye on this RSI. So the way the RSI works, you've got a dividing line. The dividing line is 50. Anything above 50 suggests a bullish momentum. Anything below 50 is bearish momentum. So we've got this underlying bullish momentum. And if we stay above 50, I think ultimately there's going to be dollar strength. So we're just going to have to watch the price action here. We've got an issue. We've got a problem. Let me show you what I feel our issue is with the US dollar. And just to reiterate, the dollar is a good place to start analysis. It's a good place to start analysis because it tends to be the first link in a chain of causation. So what happens to the dollar tends to ripple through to other instruments. So if we can analyze the dollar in a sensible manner, it's going to help with all of our analysis along the whole spectrum. What's the problem? The problem is turning points. Okay, I'm just going to draw in some. Think of these as candles. They're not the neatest candles in the world. Okay, let's do another one to the upside. Another one to the upside. Okay, one more, and let's just go to the downside again. Just bear with me here. Let's go up again. Okay, good. All right. If I had to ask you guys, where's the resistance here? I don't think any of you would have any trouble saying, Russ, here's the resistance. Okay, there's the resistance. And that's what we have with the US dollar, right? We at this resistance level. But if you take a look at the previous two rejection areas, you have distinct candle patterns, distinct price patterns that help us identify the turning points. We call them reference candle reversals. We've mentioned this many times, but it's what's lacking at the moment with the US dollar. So the first reference candle over here, you're looking for a candle that's got the highest high, okay? And then what you're looking for is the candle to the right to close below the reference candle's low, okay? Sorry, I want to get a ellipse here. There's the candle with the highest high, right? And then you're looking for the candle to the right to close below it. What we have right now is too few candles to really see if we've got a reference candle reversal. Well, we've got potentially, over here, take a look, we've potentially got a condition one. What's the condition one? It's the highest high in at least 3 candles. Potentially, okay? Why do I say potentially? Because next week's candle may be something like this. We may get another candle that's got a higher high and a higher low, and we may get another one after that. And we don't know what next week's candle is going to look like. Look, it is Friday, so we're going to get to this week's candle is going to close off today. But if we get a candle that looks like this, okay, where it has the highest high, okay, and then the candle to the right closes below it, then we can say, wait a second, this looks like it's reacting. Looks like this is a key reaction level, but we're missing just that final, two conditions. Let's go back to the dot chart. Let me bring it up. Okay, here you can see reference candle reversal. Here you can see reference candle reversal. Here, can't see, it's not there yet. Why is it not there yet? We don't have enough price action. So this key reaction or this resistance level, yes, it's very interesting. Is very interesting. We don't have enough information, but we can see there is some selling pressure that is starting to be exerted. Okay, let's keep an eye on it. If there's some selling pressure that's starting to be exerted, maybe we do get that reference candle reversal. Okay. But if you drop the time frames, will you see the following candles? Yeah, but you can drop the time frames, but that's not going to do you any good because the higher time frames are the more stable time frames. You can drop the time frame to with the 1 minute chart. Well, that's too close to the price tick. It's too volatile. Of course, you'll get many different reference candle reversals there. A lot of them are just going to be invalid. The higher the time frame, the more important the signal. We're looking at the weekly here very specifically to get a weekly signal. The weekly signal will then go down, will then drill down to the daily, and we'll line up the daily with the weekly. If we get synchronization there, then we'll go down and we'll try to get synchronization again. But it's no use getting a signal on a lower time frame that is not supported by the higher time frame because we're going to be in an ambiguous situation. Does that make sense, Kim? Does it make sense? Okay. Now we've got some other good questions here. Mia's asking, would this be impacting other pairs like the pound, the euro, and gold? Absolutely. The dollar is a part of the euro-US dollar pairing. It's part of the pound-US dollar pairing. It's part of the gold 1 troy ounce per dollar pairing. So the dollar here certainly is having an impact on those other pairs. Good question there, Mia. Now Raj asks the really important question here. He says, but the real yield has continued strength. Okay, that's the point. That's the point. So if we now go, so we've been doing all our analysis on market scope. If we now go to trading view, okay, so we'll just bring up trading view, and here is the real yield. So I have brought up the real yield chart in preparation for this. And this is the daily chart. This is the daily chart. You can see that the real yields continue to move higher. Okay, it's continues to move higher. Let me just make this a solid, okay, solid line. And that real yield's putting all sorts of pressure on the markets. We've looked at that in a few sessions this week, haven't we? But the idea here is that real yield is moving up. And if it continues to move up, I think it's going to act like a magnet, and I think it is going to pull US dollar. And then, Raj, I think that resistance level may fall. Okay, this is all speculation now. It's hypothesis, but I think it's based on some obvious intermarket relationships. So the real yield here is sort of the X factor, isn't it? Now, what we can do is we can go down to the weekly chart and see what kind of information we're getting on the weekly. So let's just do that. Okay, and what we can do here, we can go ahead and bring up a resistance over there. Okay, let me just fix this up. I don't quite want it to show this way. Let's take out the background. Let's take out the extend right. I'm going to make this red, and I just want to make the border. Okay, yeah, that's better for me. All right, and we pull this across. Now take a look here. The real yield has certainly moved up. Okay, it is starting to show a bit of a tail here. Okay, it's starting to show a bit of a selling tail here, and I wonder if if we going to get a pullback in that real yield or not. Again, Raj, we don't have the reference candle. Okay, and the reference candle is not absolute. It's certainly not absolute. The reference candle helps us with the analysis, but it's not absolute. But it's going to be very interesting to see how the real yield. It's going to be very interesting to see how the real yield performs next week. If you were a bond investor, but yields and bonds go hand in hand, you'd be looking at bonds now as a potential entry. Okay, you'll be looking at bonds as why? Well, because bonds are actually very low at the moment. Let's see if we can bring up. For the life of me, can't quite remember. Can't quite remember the 7 to 10 year bond ETF. Why does it elude me? We can use Tilt, which we've used earlier. Tilt is, we're looking at bond prices. We're looking at bond prices, but we're looking at 20-year bond prices, okay? Now, if you were a bond investor, all of a sudden, yields are getting very attractive. Yields are getting very attractive, and your price is really low. Price is really low. So if you want to lock in a price for the 20-year, let's just take a look what the 20-year yield is. We'll come back to the, actually, let's keep the tilts there. Let's bring the US 20-year underneath it. Okay, I'm just putting that in a new pane underneath. And you're looking at 4.53% roughly. If you want to lock in 4.53%, well, you're getting it at a really good price. Okay, you're getting it at a really decent price. So you're kind of at your support area for for your long-term bonds. So if there is going to be buying of long-term bonds at this point, well, theoretically, it's going to push, not theoretically, it is going to push yields down. The question is, and this is the million-dollar question, right? Are bond bulls going to come to the market? Because at the moment they're being sold off left, right, and center. Are they going to be pulled back? And if we get sort of a double bottom here, then we could potentially see yields come down. And if yields come down, then we can go back to market scope. Well, then this resistance all of a sudden means something. And if we get a movement down here in the US dollar, well, then we can go through to exactly what Mia referred to earlier. We can go through to euro, and we can look for some sort of bottom in the euro. So something like this. Now, it all depends on what happens on the bond market. Okay, all depends if the bonds are going to get bought or not. All right, so I'm just waiting for this chart to load properly. Just bear with me a moment. Yeah, there we go. So if there is resistance, a key reaction of resistance on the US dollar, then potentially some sort of support on euro. Then there's going to be some sort of support reaction on pound. And I'll just bring up pound, and then I'll bring up the precious metal, and that's where we'll end for this morning. It's really slow this morning. I'm begging your pardon. What I'll do is I shall bring it up on TradingView. So we can go through to GBP USD over here. And assuming that we get the key reaction level on the dollar, or we should get a key reaction level on the pound. Okay. Incidentally, take a look at what candlestick we have on the pound at the moment. It's a doji, uncertainty. So the bears have really savaged cable over the last 4 weeks. Now they are uncertain. So maybe something is happening at this resistance level. We just don't have the price action to confirm that. Right now. Okay. And let's just bring up gold, XAU USD. All right, well, this would be an interesting chart because we're right at an important level of support, aren't we? Right here. So if the dollar starts reacting, then precious metal potentially starts reacting as well. So you can see we're at this nexus. Unfortunately, we're missing conditions 2 and 3 on the dollar. That's very much going to be dependent, as Raj points out, on the real yield. The real yield is going to be very much dependent on if the bond bulls come back to the market. Okay, so it's going to be very, very interesting. By the way, the reason that yields are moving up is because there is a fear that the Fed is going to keep rates higher for longer. And there's a lot of strong economic data that has come through, strong retail sales, very tight labor market. The Atlanta Fed's got a GDP indicator which suggests nominal GDP is rising by over 5%. That's higher than trend. And we may have been in an environment that's got restrictive monetary policy, but we've got a tight labor market and above trend growth. That's not restrictive monetary policy. And that's why the market is all of a sudden lifting up these real yields. All right, if there's any questions, please go ahead and type those in now. Any questions, please go ahead, type those in. All right, nothing coming through. I want to wish you guys a good day ahead, a very good weekend, and we shall chat Monday morning. Keep well, guys.